This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of May the 3rd, 2021. A very interesting week, a very bullish week for the precious metals, especially with how we ended the week. Really can't urge you strongly enough to join us at TF Metals Report. Best analysis, best community of precious metals investors on the internet. All the access to everything for just $15 a month or 50 cents a day. You really need to come join us, especially at this important time. It was a very good week. We started the week by noting that the dollar index, after a big surge last Friday, was quickly falling back and having trouble again with that 91 level. That was going to be a big theme as we went through the week, and that was a big theme of the podcast on Monday, May the 3rd. If you look at the dollar chart, now again, very short term. This is a 5-minute candlestick chart, okay? So this is very short on the dollar. But I want you to notice, though, came down this morning. This is when the metals were really rolling up, right up to about 10 o'clock Central. Came down to 90.85 and then banged around there and then kind of recovered back up to 91 level. And then twice over the course of an hour tried to get over 91 and fell back. Well, again, how important is 91? You know how important 91 is. So we're going to watch now overnight. This is probably the main thing that I'll have an interest in checking. As the first Asia Open at 8 o'clock Eastern and then another one at 9 o'clock Eastern. And then when I wake up in the morning, I'll be curious to see where the dollar index is. Because at this point, and I'm going to oversimplify it, but either it rallies and gets back above 91, in which case we'll probably get some pressure in the metals tomorrow, or it continues to back off here and we'll watch that 90.85 level where it bottomed out this morning. As I said, you get below there, we're going to be talking 90.60, where we got down to last week. And again, 90.60 or so is where we were back on Wednesday. So the bond market's back to where it was on Wednesday. The metals are a little higher, but the dollar index still a good 30 cents above. So maybe there's a chance for the dollar index to back off even more. And that would be good for us, obviously. On Tuesday, May the 4th, something a little bit different, a chance to visit with Dr. Quentin Henney. If you are in the mining sector, you know who Dr. Henney is. He's a world-renowned geologist involved in all sorts of companies and projects around the world. So in my business, you get a chance to talk to Dr. Henney. Man, you jump at that opportunity. He filled us in on details on a number of the companies and projects that he's working on, one of them being Newfound Gold. And here's just a little segment of what he had to say about Newfound Gold.
You know, it is an absolute delight to be part of Newfound. I remember seeing the first core photos from hole 19-1, drilled when it was a private company. I was showing the photos in January of 2020, before the pandemic. I was out in Nevada with Colin, Craig, and a few other people. And they showed me these photos, and I thought, how on earth did they get photographs of core from Fosterville? And then they said, no, this is something new. And I said, oh, okay, I'm interested. After talking further and then getting a few more pictures and seeing some features that I think are very Fosterville-like, epizonal gold-like, I said, let's go look at this thing. So we literally flew straight up to Newfoundland and got to see the core. I could tell you when I saw it, it was spitting image, Fosterville 2. Now, okay, fast forward. The company's gone public, I think in August last year. Came out of the gate right after gold peaked, and it was a bit of everybody's kind of kicking the dog, so to speak.
Yeah.
But they launched. They had a lot of cash to make, so they launched an aggressive drill program. At this point, they're up to like 10 drills. Okay, this thing is going nuts. The drill commitment they've made, I think, is over 200,000 meters or something. I can't remember the meters, but they've only completed about 20% of the program. Okay, now here's the phenomena I see right now with this story. The results just keep coming. After like 9 weeks in a row, news release after news release of high-grade results, I think there was 1 week maybe that didn't have a news release. There was a gap, but otherwise it's just been steady. Today they released one of the most incredible drill holes I've ever seen in my life. It hit 17.7 meters, 124 gram gold. And then a second interval in the same hole, 4.65 meters of 131 grams gold.
Wow.
I mean, my gosh, I think, doing a little math in my head here, I'm trying to figure out how many gram meters it is. What is that? It's about 2,800 gram meters or something. I mean, that's insanity. Okay. That tells you you're in a big system. You don't see drill holes like that every day.
If you're a regular listener to these weekly podcasts, you're going to recognize the next chart. Almost every day we check this chart at TF Metals Report. Absolutely certain we've got the lines drawn right. And man, when price started moving up on Wednesday, May the 5th, it got our attention and made us think we might be in for something special as we go into the end of the week. It was a big topic of discussion that day. And here's another look at the daily chart of COMEX Gold. So when you look at the daily chart, and this is still the right way to draw this. I recorded today with Chris Vermeulen, the monthly technical update. And Chris does a great job. Just does a great job. So I asked him the last question of today's presentation. I said, hey, draw some trend lines for me because I want to see how you do it. And I'm sure anybody listening would like to see how you do it. Where do you draw the bull flag line, the true bull flag line, so that we've broken out? And he said you can draw it from here, you can draw it from there, you can catch these candles, you can catch these wicks, all this kind of stuff. This is the right one. I am utterly convinced of that. You know why? Because we started by drawing the lower red arrow. Remember that? From September or August the 24th or whatever, that August the 15th, I guess, through September. That red arrow, that was important, significant resistance all the way into November, and then in December we got above it and we rallied up above the purple, okay, that had been established. Anyway, notice these lines are the two red and the purple, they're perfectly parallel. And notice too the new red one that goes off of the January 6th high. Notice that is almost exactly the same distance, about $60 above the purple, as the key one, the lower red arrow, is below the purple. All that does is validate the purple, if you ask me, especially with the candle last Thursday coming down and tapping the purple as support. Any move now above that second red arrow, okay, meaning that sometime in the next couple of days we get into the 18s. Next week you're above 1820. Then we've really, it's officially in. And I put the daily RSI on here just so you can see. We're not overbought. Maybe slightly, but there's definitely room for that to run. On Thursday, May the 6th, our thoughts turn to the mining shares again. For several weeks, actually since the first of the year, we've been noting that the silver miners have been outperforming the gold miners. That trend continues. And so on Thursday, we took a look at the chart of the junior silver miner ETF, the SILJ. And finally, the SILJ. Look at all these little red arrows. Look at how many times, just since last summer, the SILJ has broken up to 16 or 16.5 and then immediately slammed backward with all these red candles. We open higher and then just get the crap sold out of it all day long. Look at all those red candles above 16 and 16.50. An island reversal back in early January. The one candle reversal off the original silver squeeze on February the 2nd. Try to rally back up. Look like we're going at 17 and boom, smashed in late February. But now look at the steady higher lows all the way back to last September. Remember how many times that dip was a great buy? And then look at yesterday. Dumping yesterday. Not only below the 50-day, but below the 200-day, and then coming all the way back to give you basically unchanged day and a little hammer thingy, followed by a big rally today. Man, this thing looks salty. And again, I'll warn you, what did I draw? 8 little red candles on here, or arrows going, look at the reversal. But man, this, after yesterday, and now today, and a new higher high, and a new highest close, again, since late February, we make a move now, finish the week up near 17, make a move next week above 1750, and it's going to be looking really, really good. And Friday, May the 7th was another very strong day in the precious metals and the mining shares on the back of a very, very bullish U.S. jobs report. Not only weak in the jobs number, but very strong in the average hourly earnings, bringing home that message that inflation is not transitory. It's here to stay. That's going to have a big impact on the precious metals in the weeks ahead. But boy, did we see it in the mining shares on Friday with the GDX, the big gold producer ETF, looking particularly nice. So we're getting very close. We got a, again, strong shot at finally doing it next week. Think the train's leaving the station? Think the conductor's waving at you? You're trying to run, trying to catch up, like in the old movies? Well, here's the best example I can give you. Look at this GDX. Yep. What do you see here? Well, I didn't draw a cup. I could. There's clear resistance, about 31.5. Broke out, came down, extended all the way up to 46. Come down in this long, dreary consolidation bull flag. Bounced from 31.5 again. And now clearly broke out 3 weeks ago. Tested that line of support last week, and now it too is charging higher. That is the highest close in the GDX since November the 13th. Big target up there at around 38, 39. Above there, man, the thing's just going to take off under its own momentum. Thanks for listening to this week's podcast highlights at TF Metals Report. Man, I'm telling you, we have finally made it through the woods. It has been a very long, hard 7 months of consolidation, but we are ready to roll higher again, all the way into the summer. This is the time to join TF Metals Report. Again, it's only 50 cents a day, but I'll make you a deal. If you're listening to us on your favorite platform, whether it's YouTube or Spotify or iTunes, if you go to TF Metals Report, click subscribe. Set up an account and subscribe with a monthly subscription, that thing that's $15 a month. Enter the promo code TFMR for TF Metals Report. TFMR. You get half off your first month. We don't do this very often, but I'm doing it now for all of you that listen to these podcasts every week because you need to join TF Metals Report. This is going to be a very exciting summer for the precious metals. And again, if we can save you a few bucks, you can come in and kick the tires, all the better. So again, come to TF Metals Report, click subscribe, and then enter the coupon code TFMR for 50% off your first month of a monthly subscription. Hope to see you there, and I look forward to another one of these podcast highlight shows next week.